We've only just begun. What's up, everybody? Welcome aboard the Bubba's Daily Update. And of course, from the Carpenter song, we've only just begun. I think that this market has only just begun the selling. I think that now, as we've been talking about all week, in the last couple of weeks, we were looking for a few certain things to happen. The market's failed at the top. Interest rates are going up rather quickly right now. We've now got a 10-year about almost 317, and the 30 for the second consecutive day, or the long bond closed over 3.3. Those are not good signs for the general markets here going forward. You're going to have a lot of money that wants to get out of this market that didn't want to be in and was forced in, and you'll start to see it going into the bonds, looking to get some yield now they can get 3 or 4% outside of the market. The dollar remains strong. We've got the pundits continuing to beat the horn of how strong the economy is, and there is no doubt the economy is strong, okay? But what do we know for sure? For years, the employers had a big edge on the employees because there wasn't enough jobs. Now there's an oversupply of jobs. So what does that mean? It means that the employees are going to have to pay more. So their earnings coming up in the third quarter may be very good, but I will bet their guidance will not be good because they know that if they hire somebody at $25,000 a year, that's $40,000 off the bottom line of profit. And that's what we're going to see, that the profits are going to start to shrink. There's nothing wrong with it. That's a normal market and a normal economy. Now the employees hold all the trump cards. So they're going to have to get higher wages, which will take away from profit. Adding to that, the much higher interest rates for all the outstanding loans and the debt bomb that we have, and that will cut further into the profits. So even though the next quarter, this quarter coming up may have good profits, it's not going to be good enough. And of course, the equity market is a forward-thinking indicator. And it's telling you that there may be trouble 6-9 months down the road, which would exactly time in to what we've talked about. So the markets will sell off long before the economy starts to get in trouble. So what we're seeing here now is a robust economy, a lot of good things, but of course, now things have to rebalance the other way. As they call it, it'd be like reversion to the mean. And the big key here to really watch is what we talked about, the Russell. The Russell has been getting pounded every single day, 1-2% on a daily basis. That is not healthy, tying to the fact that we've been seeing, even before today, more new lows than new highs. Those are not bullish signs to the market. So the pundits can chortle and talk up the market and say it's buy. We're never going down again. And this time is different. It always ends the same, and this time is not different. We're going to start to see. Now, this may be the indication that we're looking for. The 10-year is continuing to rise. The dollar is continuing to rise. And the long bond is getting into some key areas. So we will watch from here to see what's going to be next. But certainly the next rally, we will be looking to sell into the next rally. We are now ready to become more active. As volatility and volume come back to the markets, we are now ready to look for a spot to sell. Now, we're not going to sell into the hole from today's sell-off. We're going to sell maybe tomorrow, maybe the day after. We have to see what the jobs number brings us, because the jobs number could create an initial spike, which would be one we want to sell into, because if the jobs number is as hot as the ADP job number was yesterday, that means that rates are going to have to rise even faster. And this is one we talked about, if you remember, that the bond market is such a big market, it can outmuscle the Fed here, and I think that's what you're starting to see. So we saw a sell-off, and again, it wasn't a huge sell-off, 1.5%. You should never worry about that. That's like nothing to worry about. However, the way the action happened, it now looks like, based on all week, that the markets are now ready to sell off a little bit. Gold remains flat. Oil got clobbered today, which makes sense based on the blow-off pattern we talked about. We're still not short, unfortunately. We're still licking our wounds. But in the meantime, bonds futures were lower, means interest rates were higher. You've got just a lot of things that are indicating there is trouble a-brewing, and we think that, again, as we've said, we've only just begun. Grains were fairly strong today, and they continue, and they will get stronger. Again, the money that's going to come out of the equity market, and there's going to be a squeeze here in equities because of all the margin debt. The farther the markets go down, the more margin calls you get, the more you're going to have to be seeing people liquidate out of their positions, which will create pressure. But new money has already started to come into grains, and I expect to see more. And I also expect to see more into the meats. Okay, now we got an interesting divergence right now. October hogs are still higher. December hogs are getting clobbered. I think those are a great buy here. I think cattle's doing exactly what we thought it would do and kind of churning around, but churning around at the upper end of the range. So there's a lot of data here to focus on, and I'm not talking about news. I'm talking about the way the markets are trading. 289 in the spiders, SPY is a key level. The the Russell's already broken down. So we've got issues. We want to look now at rallies to potentially sell. That's what we'd be looking for in this market, is for the opportunity to sell into a rally, because I think bonds are going to continue to go lower, which means interest rates are going to continue to go higher. And of course, I think we're going to get to that black swan event, which is 3.5 on the 10-year with a dollar that's near par. And I see that happening. It could happen, soon. It could take a little bit longer, but we are definitely now looking to be sellers of this market. Bitcoin held up beautifully as we expected. It has made some nice levels. It's very churny right now, but we'll continue to look here. But through it all, watch the VIX and watch the Russell. Those are two great indicators as to what the street is thinking. But remember, the trade has been more of the retail people that didn't believe in this market for 10 years. Now they got in, and now we're starting to see some volatility and some selling. So that's just something to keep in mind on. That'll do it for today's Bubba's Daily Update. Remember, we'll be back on over the weekend with Bubba's Bottom Line, and then back in on Monday with Bubba's Daily Update, starting the cycle over again. In the meantime, we got a football game, which I'll give you my prediction at the end. And of course, my high school investing program. If you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. And tonight's football game, I really don't like the game. If I was forced to take it, I'd have to take the points, but I'm not. I do like the under, just for like a beer and a pizza. That's how I see it. Everybody have a great day. Thanks so much for being here. This is Bubba's Daily Update, and remember, jobs tomorrow.